Okay, like I was saying, this particular trade now, I actually use fib level to actually catch this trade, but irrespective, let's mark our fib level to actually see how we caught this trade. But I knew that we actually caught this trade on the 0.5 level, so irrespective, the moment I saw reversal after tapping into this zone, I knew that we are going to have a 0.5 level respected. And irrespective, can you see where I kept my entry? It's on the 0.5 level. Irrespective, when the market came to this 0.5 level, boom, it actually smashed our take profit. Irrespective, I was actually targeting this zone, but when I saw this particular double engulfing, I knew that the market was going to actually manipulate outside this particular zone before it actually falls down back again. So irrespective, that is why I took profit outside the zone. So that is how we caught this particular third trade on Wednesday, irrespective, Wednesday 28 May 2025. So this particular trade actually resulted to an SL because I actually used a tight stop loss irrespective, but boom, the market did not actually respect this particular order block, and it only just gave us reaction and took the early buyers out, took us out irrespective, and that is how I actually lost this particular trade. On that same Wednesday, New York session, we have about 3 confluence that actually tallies together with our rules. Firstly, this is our break of structure. Let's go to the rules together. This is our BOS center. Okay, this is our break of structure, and this is our order block. Here. Can you see? This is our order block here. Now my rule is I don't mark the wicks, I only mark the body candle, especially on gold. I only mark the body candle. So this is my break of structure, rule number 1. This is my order block, rule number 2. And this is my inducement. The inducement, liquidity, anyone you call it, it's still the same thing, bro. They are all phrase. That is what they call it. So irrespective, it still stands for in the same thing. So this is our inducement. So rule number 1, break of structure. Rule number 2, order block. Rule number 3, inducement or liquidity. Rule number 4, entry. And boom, the moment the market came, it tapped us in immediately. Now what are we using this line for? We are using it for our take profit again. Can you see? We use this line for entry. Now we are using it for TP. You see, that is why most of the time when I draw my double engulfing line for my entry, I still leave it in case the market actually breaks it and I see another entry. I use it as my take profit because I know that this is now a resistance. It's actually a support. Can you see? Here it is a support. But irrespective, the market came, broke it down. Now it's actually a resistance. So the market actually resisted this particular zone and it continued coming down. So that is how I actually caught this trade. I caught a 6:1 RR, and I actually rallied this trade from this particular zone here to this zone. And that is how we actually finished Wednesday with profit. So irrespective, on Thursday, we had about I think 2 trades, but irrespective, we lost the 2 trades. But let's go through the recap. Okay, so on Thursday, we had an impulsive move to the downside. So irrespective, when we are having that impulsive move to the downside, I actually entered this trade, I think, on the 30 minutes time frame. So let's go to the 30 minutes time frame and see what is happening. Let's go on the 30 minutes time frame. Okay, this is it here. Yeah. So on the 30 minutes time frame, can you see? No. This is not where I'm supposed to be. That's not where I'm supposed to be. Yeah, this is where we are supposed to be. So on the 30 minutes time frame, can you see? On the 30 minutes time frame, we have a clear order block. We also have a clear liquidity. Can you see it here? We also have a clear liquidity, but irrespective, what did the market do? Gave us reaction, boom, and it failed our order block. It failed our order block. So I was actually respecting a break and retest for this particular order block, but I did not see any pullback that came to retest this particular order block for me to look for an impulsive move to the upside. So I didn't actually take the trade for this failed order block, because normally if I see reaction from other blocks like this, I actually make sure I exit the market in 1:1 RR. The moment I get a 1:1 RR and I see a reversal, I would actually be waiting for a break of that particular order block, retest of the order block to the upside. But irrespective, can you see, I didn't see any retest here. There is no retest, and there is no reason for me to actually enter the market just like that, irrespective. It's called gambling. So I didn't see any retest here, so that's why I actually left that particular trade. And irrespective, the trade actually came to our POI, gave us reaction, and actually failed our order block. So irrespective, I actually caught an SL on this particular trade on Thursday, and it was actually a London session trade. It was a London session trade, so it did not respect our POI, did not respect our rules. But irrespective, this kind of SL actually gives me joy, because irrespective, I followed my rules. That is the most important thing in trading. You need to follow your rules. Your trading plan is very, very, very important. So irrespective, I didn't see this as an SL, rather I see it as a trade that I actually followed my rule, but irrespective did not respect my rules. So irrespective, we actually caught an SL here, and boom, resulted to an SL. So let's go back to our 5 minutes time frame. Let's go back to 5 minutes time frame and analyze the remaining trades. So this is the SL that we actually caught on Thursday. That's the SL we caught on Thursday. And Friday came. What did I do on Friday? On Friday, I actually marked the open and close. I actually marked the up and down of this particular previous day. This is the previous day low, and this is the previous day high. So I was actually expecting a maybe probably Friday should be maybe a turtle soup of this previous day high before we see an impulsive move to the downside, because irrespective from the Asian session, no, from Thursday, that's Thursday from the London session, we had a previous day low, but Friday did not test that previous day low, and Friday did not test the previous day high. So irrespective, we have a trading range. So I knew that yes, this trading range was going to give us also an opportunity. So I did not see any impulsive movement, and boom, yes. Okay, so let's analyze our Friday trades. Okay, so when the market actually started on Friday, can you see, we had the respect of this particular psychological zone. My psychological zone was respected, and irrespective, I was up for Asian session for this particular trade, but it did not give me my confluence. I will call this just a gambling. If I actually take this trade, I know I gambled. Yes, it's my psychological level. It's actually a confluence for me based on my trading plan. It's actually a confluence for me for my trading plan. But irrespective, I will see it as a gamble, because there is no good confluence that I will say I actually used to actually enter this trade. So irrespective, I allowed that particular trade. So when I saw a break in this particular line, can you see, we had a break here. We call it change of character. We had a change of character here. And what am I expecting after that change of character? I was expecting a pullback. So what did I do? I used my fib level to mark from the top of this particular trade to the bottom of this trade. Okay, I think I caught this trade on the 15 minutes time frame. Sorry, please, let's be sure of what we are doing. Let's be sure. Okay, so we have a 0.5 level. Let me go back to the 5 minutes time frame. Don't worry. Anyhow, we mark it anywhere. Fibonacci does not lie. So irrespective, why I actually shifted my 0.5 level to the top, to the upside, was for a reason, but let's do it this way. I didn't actually put those things in the right zone. Okay, so that is a nice one. For the 5 minutes time frame, after we had this break here, for this break here, I'll call it BR, break and retest. I don't care about whether it's a change of character or not. Did it break this particular line? That is what I'm after. And irrespective, boom, it actually broke the line. This is my break and retest, and I actually have inducement. Don't forget, we have a reason why we are actually drawing this particular change of character. Can you see it here? We have a buy that created this sell here. We also have another buy here that created all these cells. Now, this particular buy, does it have inducement? Yes, it does have inducement. Where would we call as our inducement? We'll use this as our inducement, isn't it? We use this as our inducement, or we call it liquidity. Now, what are we using to actually enter this trade? We are using this particular order block here. Can you see? This is our order block. No, so now we are going to count our rules to actually enter the... Normally I wasn't supposed to enter this trade, but irrespective, we have a impulsive move to the downside. Don't forget. So my Fibonacci level is what gave me my reversal point here. My Fibonacci level gave me my reversal. So my first confluence was change of character, and that change of character, we expect the market to come and retest. My Fibonacci level, 0.5 level, my 0.5 level is actually here, and this is my 0.5 level, second confluence. The third confluence is my order block. Can you see my order block here? This is my order block. My fourth confluence is my liquidity or inducement. Can you see here? We have inducement, we have liquidity here, and irrespective, the market came, took out the liquidity, and actually tested the order block. Irrespective, we saw immediate reverse. My target was this particular zone here. That was my target. Sorry, I'm going to show you this target very well so that you have idea of how I actually caught this particular trade too. So irrespective, we had 5 confluence for this one. Change of character, that's the break of that particular zone. Order block, that's the second rules. Fibonacci 0.5 level, that's the third confluence. We have a liquidity, that's the fourth confluence, and my entry. Entry is also a confluence to me, so irrespective, I entered this trade. I was supposed to rally the trade from that zone to this particular zone here, but irrespective, why I exited the trade was because of this double engulfing candle. This double engulfing candle was why I exited the trade. So irrespective, I caught a 2:1, 3:1 RR for this particular fib level trade. So now how did I catch this trade? Normally, this particular impulsive move was supposed to test this particular break of structure line and my OCL. This is my OCL. This is my OCL, and this is my break of structure. No, this is my OCL, and this is my break of structure. Sorry, no, that is not a break of. This is not a break of structure. This isn't a break of structure. Okay, yes. So irrespective, this is my OCL. And this is my break of structure line. This is the line that I use for my breakout structure, and irrespective, most of the time I actually use this my breakout structure line as my confluence. So my first confluence was this my breakout structure line. My second confluence was my OCL level. Can you see it here? My OCL level. And the third confluence was time. Third confluence was time. Normally this market actually started at London session. Can you see the market came into this particular zone? It gave us liquidity. All these plays are all liquidity. All these things are liquidity. All of them are liquidity. So at around can you see 4:50 a.m. almost entered our zone. No, it actually reversed. So that was why when I saw this particular pullback, I drew my fib level and I knew that it was going to respect our 0.5 level, and at the same time was going to respect our breakout structure line, and irrespective, boom. So same thing here, breakout structure line. So same thing here, breakout structure line, OCL level, and boom. Can you see the time that the market taps us in? 10 minutes after 8, London open. Boom. Can you see? Boom, tapped us in and started rallying up. Irrespective, I expected an impulsive move here, but the market just decided to do its thing. The market decided to do its thing and started consolidating and consolidating and consolidating. Now, why did I take profit from here? Because of these particular buys that created these sells. These particular buys that created these sells. So irrespective, I took profit here. So now, what is my second entry for this particular trade? Second entry. My second entry was on this particular line. I didn't expect the market to still come back, crush people out before it started moving. And what did it do at last? Came back, crushed people out of the market. Can you see? Took me out of the market immediately. Even if I put my stop loss here, can you see? It is going to still take me out. So irrespective, Forex is all about losses. It's just that make sure you are losing well. You are not losing dumbly, or maybe you are losing you are losing as if you don't really know what you're doing. So it's better you lose wisely. So irrespective, this is actually resulted to an SL too. So this was the impulsive move I was waiting for here, and it ended up happening. Spike us out and went to its normal direction. So that is it for this particular trade. So on that same Friday, this particular fourth trade was caught on at New York session. It was caught at the New York session. What happened? What did I actually look at? What was my confluence? My confluence was this particular double engulfing candle and my OCL. Can you see? Double engulfing and my OCL, and when the market came, tapped into my double engulfing, tapped into my OCL, and it reversed immediately. So that is how I actually also caught this particular trade. We caught a 6:1 RR because of our tight stop loss, and irrespective, we rallied this trade from this zone to this zone, and boom, we hit TP. So that is it for my trade recap. Thanks for watching my trade recap, and I'm gonna see you on the next one. Peace out.